buying a home versus building wealth. Do you own a house?
Yep, I own my own home. Get an education, you get a mortgage, you become debt-free.
And so that's what you did?
That's it. That was the path I started on, absolutely.
Okay, how's that changed?
Learning different skills, especially in the world of trading and investing, having that money tied up in a house doesn't quite make sense to me the way it once did. Right now, where I'm heading towards in the current moment, it would be renting but investing aggressively.
So hold on, are you going to sell your house?
Yeah, I'm in the process of doing it.
Oh, no, why are you doing that?
If I wasn't to sell my property now,
Yeah.
and I was just to stay where I am for 5 years, I have lost out on 20% a year as a minimum over the next 5 years.
What do you reckon you're making roughly?
Stocks, quite loosely 20 to 25%. Cryptos is probably in around 80 to 100% a year. A property is never going to do that for me.
I get messages all the time asking me how I went from $100,000 in bad debt to a $13 million portfolio. By watching this show every week, I will share exactly how I did it, how I achieved it, and the lessons that I've learned along the way. So do me a favor and please subscribe to our channel. It's simple, it's free, and it helps keep the show going for you. This is where you eat and we talk about changing the way that you think about money, with insights from successful investors, entrepreneurs, and everyday people taking control of their financial futures. So double check that you're subscribed, and thank you for being part of this journey. Welcome everybody to the Lunchtime Investor. We are so excited for this episode because we have Paul here, who is one of our amazing senior, what would you call a sales manager? You're a sales manager,
yeah.
You do a brilliant job, absolutely fantastic, helping people to learn how to invest and trade. So it's great to have you here. This is your first time?
Yeah, absolutely, first time.
We are here, remember, you eat, we do the talking. Although we want to eat, we can't, but you know, that's the whole idea. And we're going to talk about buying a home versus building wealth. Now, the question is it an either or? Can you do both? But, well, how old are you?
30.
You're 30.
30
Oh,
in
I
August,
wish
yeah.
I was 30. And do you own a house?
Yep, I own my own home.
Oh, so you have a house?
I have a home right now, yeah.
Okay. So you obviously think that it's good to buy a house.
I bought the home before I worked at Investment Mastery, so I had that belief once upon a time, for sure.
Okay, how's that changed?
Learning different skills, especially in the world of trading and investing, having that money tied up in a house doesn't quite make sense to me the way it once did.
Oh, really?
Mhm.
Because we get taught, do we not? And this is the kind of thing that we want to talk about, when buying a home isn't really, the best move.
Yeah.
And I think we both did, right? Because we get taught, work hard, save up, buy a house. Isn't that what we do in the UK?
I've had this conversation probably over 50 times with my mum, and that my mum has that belief. That was her growing up. Get an education, you get a mortgage, you become debt-free.
And so that's what you did.
That's it. That was the path I started on, absolutely.
Yeah.
Yep.
Why would you not, right? You own something amazing, and it goes up in value, and you pay it off, and then it belongs to you, right? But maybe there's a bit of a wealth gap myth here between renting versus owning, which we'll discuss. And but if you don't, what do you do? It's not just, oh no, I'm just going to rent. No. You rent, and then you do something with it, or not. Let's discuss that, and then let's talk about some strategies, right? We need to some strategies how we're going to actually build the thing up.
Sure.
And then maybe the difference between, what a normal person might be thinking versus an investor. We assume the investor is going to be wealthier. We assume, right? So what's your dream scenario now? I know you're a home owner, but what's your dream scenario? Let's say you were to start again, right? Would it be owning a home outright? Would it be renting, but investing aggressively? A mix of both, maybe? Or not sure?
Right now, where I'm heading towards in the current moment, it would be renting but investing aggressively.
So you would be renting. So is that what you do? So from now on, so hold on, you're going to sell your house?
Yeah, I'm in the process of doing it.
Oh, no. Why are you doing that? Hold on. Okay, this is interesting. So why aren't you then? Okay. So this is Robert Kiyosaki, Rich Dad Poor Dad. He was the first person. I read the book. I think I ignored it though. I still bought a property. But anyway, to basically say that your home is actually not an, what did he call it? Not an asset. It's actually a liability. And I was like, what? How can that be possible, right? You now have that liability. Why not turn it into an investment? You rent that out, right? And you rent.
Good question. For me, in terms of property renting.
No, is it a good question? You're just saying that. No, are you considering it seriously?
No, it is, because for me, the reason why I'm doing it to start it off, the reason why I'm selling my property is it does not make sense for me to have a large sum of money tied up in a property that at some point in one day will be worth something to me.
Yeah, but
in the future.
But you can get cash flow now. You've got this property, right?
Yep.
You could rent it out now.
Yeah, could do. I just don't know enough about that. I know a lot more about what we do. That's where I'm at right now.
Yeah.
At some point in the near future, maybe not so near, 5-10 years, will I look at property as an investment vehicle? For sure.
But you've already got one. You've already got an investment property. Now all you need to do is rent. Listen, by the way, I'm not a property guy. I don't know what I'm talking about here because I'm more like investing, what we teach. But interesting, because you could do a mixture of both, right?
Maybe. For me, I don't know the numbers on property. Again, don't understand it enough, but following something like the VCA.
Well, hold on. You don't need to, right? Yeah. So as far as I'm concerned, because Madrika does all the properties, right? But as far as I'm concerned, as long as the income that you get from renting out covers everything, covers the mortgage payments, covers the, anything that goes wrong, etc., and gives you a little bit of a profit, why not? So they're basically paying for your, and every 10 years, is it that the proproperty doubles? Well, let's say 15.
In the past.
In the past?
Yeah,
all right, well, maybe it's 20
sure.
years.
Yeah,
You're 30 years old.
Mm-hmm.
You'll have a property which has been paid off.
Again, that money might be worth something in 20, 30 years.
Yeah,
for sure.
Yeah.
The reason I'm selling is because I don't really want to wait that long. I can now get that money out now in today's day and age.
Okay.
Do something with it and grow it in the next 5 to 10 years.
And it's the something that we want to find out. What is it that your plans are? That's what we really want to find out, because most people say buying a home is your best investment. If you in the UK, that's it. Boom. And honestly, you could put figures, you could put facts in front of people. They will not listen because that's, but let's see whether that's really true, right? What is it? Don't tell me we're going to listen to Andrew Tate here. I mean, honestly, I would never have thought we would listen to Andrew Tate when it comes to why property. I mean, there's lots of things he knows about. Well, let's have a look.
Don't buy a house. Rent a house. What?
I have no idea why that spoiled boy keeps showing up on my For You page, but that's a huge red flag. Guys, if you're interested in what he's saying, stop. If somebody is advising you to rent rather than own your own home, they don't want good things for you. If you pay $1,000 a month in rent and you stay in the same location for 10 years, then you've spent $120,000. Wouldn't you rather that $120,000 goes to a mortgage with something you could actually own and then take a loan against and buy another house, then rent that house out and that rent will pay off the mortgage? People like that don't want you owning a house because they want you dejected and susceptible enough to listen to whatever BS they got to say and probably give them some money.
Okay. Wow. Interesting one. I'm not sure that that's what Andrew Tate wanted. Oh, okay. Well, it doesn't matter.
Yeah.
So that was interesting. So this person here, but who is this person? Anyway, he might be somebody who does something which makes more money than maybe the crypto. Is that what he is?
I think
Hussar, the crypto Hussar. Okay. Well, I mean, I ought to agree with him, right? Being in cryptos, I ought to agree with him. But is that true though? Because most people would agree with that, right? If you pay that money, 10,000 was it 10,000 a month or no, it was 1,000 a month over 10 years.
Yeah,
120,000 pays off the mortgage, right?
I mean, it makes it sound really simple.
And well, it is simple. No one says it's easy, Paul, but it's simple.
Yeah.
You then remortgage that,
Yeah,
right? And then from that you can buy another investment property. And I have to say, we did that.
Yeah.
So we have done that. We remortgaged and then kept buying. And this is actually, we went to seminars to learn this.
Yeah,
And it does work. It does work. We got like 10 or so property. It does
Let
work.
me ask you, when did you do that? What was the year when you did that?
That was last year. No, it wasn't. No,
Yes.
that was several years ago. Yeah, that was probably, I mean, could have been even 15 to 20 years ago, to be honest.
There you go. So the argument that I have in where we are today, why I'm doing it, is 15, 20 years ago, what's been the average property increase since then? What would you say?
I mean, we were always told that properties generally go up they double every 10 or so years.
Okay, they double every 10 years.
Do they not do that anymore then? Because there's inflation, it must do.
Let me just get the crystal ball
Yeah.
out from everything.
No, whether it's going to, we
Okay.
don't. Yeah, we
Yeah.
don't know.
I don't know. But if you're telling me my 2 up, 2 down small family home is going to be worth north of £700,000 in 10 years.
Listen, I have a flat, right, in London, right? It is a 2-bedroom little place. That thing has rocketed up. It is like it's really central. It's like in Earl's Court. It's really central. So you keep thinking that can't be, it can't be, it can't be, it can't be. Every 10 years it can't be. The challenge is supply and demand, right? So if there's all these people coming in and everyone's complaining, there was this massive thing in London. There was like 3 million people there. Well, it depends who you talk to. Some people said 100,000. I think it was more than 100,000. But so there's all these people. They're waving their flags and they're saying illegal immigrants. I think not immigrants. It's illegal immigrants. But they're saying too many people coming in. Too many people coming in. Well, hold on a moment. So that means that property prices should keep increasing, surely.
Based off supply and demand, based on financial capacity, I would say that, especially in and around London, we're almost at like boiling point for where prices are
We
right
have
now.
been for years, Paul. We're always at bloody boiling point. Prices are ridiculous. They always have been.
How far can it go? I think we're at a point where it's almost at the point of unaffordable. Almost.
But it always has been. Is that people have been driven out of London and I don't know who the hell is in there. Well, it's interesting. I don't know. You don't want to judge a book by its... I don't know whether this guy has any money or not, or whether he just doesn't like...
Hopefully, if he's in crypto, hopefully he's done something.
He should.
Yeah.
He should. Okay. It's a little bit blind leading the blind here because I do have properties. I own properties, but actually it's Madrika who did most of the properties. So
What about your personal?
personal home?
Yeah. Do you own it?
Yeah.
Why?
Yeah, well, because at the time I thought you had to, and in fact, I did something that Madrika didn't really want us to do, which is I think you can pay off 10% without getting any kind of financial penalties, and I made sure that the mortgage went down and down and down at least every other year or so, and I enjoyed paying that off, and then I stopped doing it after a while because, I think rightly she said to me, but why? Well, you can make so much more money elsewhere, and I said, I know, but this is I've moved out now, and funnily enough, because we're divorced now. So she lives in the house with the kids. And I didn't rent. I bought a flat, a 2-bedroom, right, around the corner. And I bought it and I put it in both of our names because she's, my best friend and she's the mother of my kids. And the thing is that everyone's like, you did what? First of all, why did you buy it? And secondly, why did you put it in her name? But why didn't I rent? I don't know. It's just you're conditioned to like, well, I'm living there. Actually, I thought I'd be there for 6 months. Anyway,
did you even question it at the time, or was it just, of course I'm going to buy it?
Yeah, of course I'm going to buy it. Well, it was more her because she's the property person, and she's like, no. And I'm more for renting. So I want to move out now because I want to buy a big. Wow, and let's listen to what I just said. I just said, buy. I want a bigger place, make it more into a home.
Nice.
But we're talking about it, and she goes, well, obviously we're buying. And I'm like, no, I'm renting for so many different reasons. I want to test the location. Do I want to really stay there? Do I not? Maybe another house, maybe a different location, etc. I think renting because I can do so much more with that money, and I think that's where you are.
There you go. Absolutely.
Yeah, but isn't that only because we know what to do with the money?
Oh, for sure.
Which I think we need to discuss. What do we do with them?
Before investment mastery, I would never have done that. I've never even had the thought to do this.
But
no way.
It feels safe, don't you think? It's like,
how safe is it?
Do you really? Okay, let's talk about your partner.
Okay. Yeah.
Does she want you to rent or to buy?
I think her preference is buy.
Why? Why?
Probably similar to Madrika, where it's a home, not a house.
It's a home, and there's you've got kids, right? You're just about to have a second. So home
for sure. And am I saying that we're going to rent forever? Absolutely not. At some point, we will buy the forever home.
Okay.
Just using round numbers. If let's say, I don't know, I want a £1 million home. For me to even get a mortgage on that, there's no way I'm ever going to do that. Financially speaking. Whereas if I can pull X amount out of the property I have now, I can invest it for, let's say, 5 to 10 years. I could get it to a point where it's, again, let's use round numbers, let's say 250,000. I then put 25% down on that home, and then I go interest only. Suddenly I can afford a £1 million home. But on a normal mortgage, capital repayment, there's no way I'm ever getting.
So there's another differentiation then. So buying something, on whether you do a repayment or whether it's just, okay, interesting. We will just have a debate about that. I wonder, because we just had Simon Zucchi in, and we're really hoping to get Samuel Leeds in.
Yeah, nice.
I have to prepare for that one because I think he's just going to shout at me. But
more Andrew Tate clips, I think.
Yeah, exactly. But then we'll have to ask about, do you just repay or is it interest only? Interesting. Yeah, very interesting. Okay. So saving via renting is what you're saying.
Not necessarily saving. I think the rental market is quite expensive right now. I'm not necessarily going to be saving, but what I can do with the money I'm going to pull out of the home
Got it.
tied up,
Got it.
that's where I can make the most change.
Okay, so that's for you because you've got this thing, this amount of money. What about most people that are starting out? Like they don't have what you have. So should they be renting or should they be what should they be doing? Living with their parents?
I can't answer that question. Everybody's situation is going to be different.
Yeah.
That's a really hard one to answer, and the economy is going to change over time.
No, but I think most people wouldn't be able to afford or even get a mortgage, let alone pay it. So I guess they're having to rent, and then they're moving further and further outside of big cities because it's too expensive.
I think the banks are starting to look at 0% zero deposit mortgages now.
Bloody hell! If you
Which
start
is a
doing
scary
that,
time.
that's scary because we've been through that. We've got to learn. Each generation forgets, but 2008. I mean, watch that film. What is it? Is it the Big Short?
Big Short.
Is it that one? I think it's that one where he goes around basically interview. Is it that one where he goes around interview? Go, you what? He goes, yeah, they go, yeah, we just hand out mortgages, especially the illegal immigrants. Oh no, I think he said immigrants. The immigrants, yeah, they just sign anything like that. And he's like, why are they admitting to this? And the guy goes, they're not admitting to it, they're boasting. And they go, oh, wow. Okay, let's have a look at this. This is somebody, we never know who, man, woman, we don't know. And nowadays, you never know anyway. So renting versus buying, not worth it to buy. Oh, this is interesting. Does anyone else feel like renting is a complete scam? This is now the opposite argument. On paper, renting can look smarter. You save up, let it grow at 5% per year. Okay, immediately, I'm like, at 5% a year.
Yeah, inflation's going to kill you.
What do you reckon you're making roughly?
Stocks in and around, quite loosely, 20 to 25%. I don't really need to do too much for that.
We're talking about a year.
Yeah, that's just VCA.
And that's just really simple, isn't it?
So simple.
Yeah.
I literally look at my portfolio, stocks portfolio, probably 3 times a month.
Yeah. Oh, do you?
Yeah, that's it.
You're getting out of your own way.
Yeah, because you don't really need to.
It's so interesting. I think a little bit more than that, but bloody hell. Because you might meet, like Tesla's massively gone up. And like massively, it's just like, do I take some off or not? Okay, let's come back to this. And after, what about cryptos?
Cryptos is probably in around 80 to 100% a year.
Okay, so now I see maybe we should have started with that. Now I know what you're talking about. Now I understand why you wouldn't want to put it in a house.
Property's never going to do that for me. You said...
Okay, but hold on. Where's your crystal ball with cryptos then? Oh, actually, there is a crystal ball there. Can you pick it up?
Yeah, sure.
We actually have a crystal ball there. Watch the apple. There we go. Right, come on then. Hold it so I can ask you. Right, go and hold it. All right, really focus. So what do you think is going to happen like with cryptos? Are you going to carry on making 80 to 100% a year?
I'm going to follow a strategy that's very simple to follow that may make me 80% a year.
Okay, but you don't know that you're going to be making that.
Absolutely none.
You have no crystal ball, Paul.
Yeah.
Well, you have one, but it doesn't work. Well, it might work. I don't know. And after 5 years, you've got around... Okay, this is the challenge. This right there is the challenge. Are we showing this? I don't know. But on paper, renting can look smarter because you save up, you let it grow at 5% a year. That's the problem, the 5% a year.
Yeah.
And I don't even know what they're talking about. Are they talking about the bank? What are they talking about?
It's probably
despite this rent is basically the same cost as a mortgage, so why not just stay flexible and avoid the fees? With buying, yes, there's big upfront costs, blah, 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 but instead of handing money to a landlord, see, there seems to be a thing about that. I don't have a problem with handing it to anybody.
Yeah.
I'm more concerned about me, to be honest. You're at least putting it into an asset that can be sold or leveraged later. Even if prices don't move much, you've been building ownership, not just burning cash.
I love this.
That's interesting. Yeah, hold on, you agree with that?
No, I love the terms they use.
Yes.
My mum gave me a similar term. I spoke to her about it at the weekend, and she said, you're filling someone else's pockets. And what people don't realise is even at a 4% interest rate, which is probably quite normal in today's day and age, half of your mortgage payment is interest.
Yes, and it's the upfront bit.
Yeah.
So you're going to be spending the first few years, you think, I'm getting ahead, I'm getting ahead. You are not getting ahead at all.
You're paying nothing off.
And only then do you start paying off.
So you can say you're putting money in other people's pockets, but I just want people with a mortgage to know you're doing the exact same.
Yeah.
Just half of it.
So the whole thing is, the more I discuss this, the more I think about it, the more I read about it, is that your first, wherever you live with, is a liability, so therefore you might as well rent. and then learn a skill where you can make a lot more than inflation, a lot more than you would elsewhere, 5, 10, 15, 20, 25%. And as you get better, you get higher returns. That's what most people don't understand.
Yeah.
Like your, what you said, 20, 25% a year, if you looked at it a little bit more often, you might actually do 30, 35. Now, that doesn't sound like a big difference. That is huge.
Huge.
And over time,
Mm-hmm.
it is ginormous.
Especially if you're investing every month as well.
Yeah, absolutely. And that's
Change.
compounding, isn't it?
Big change.
The compounding is, and the compounding, I think you can really do much more when you're trading and investing than you can with property, I think. Unless you flip it, I guess. You can
Yeah, flip it, you get the rent, you keep the profit, you save that up, you go buy another. I don't know how long that would take you, depending on your profit margins. There's definitely ways of doing it in investment vehicles, be it property, be it stocks, crypto, whichever.
We'll ask Samuel when
Absolutely.
he comes in.
Yeah.
Okay, so that's good. What about this? Compounding works best with time. What about delaying? Are you delaying?
So if I wasn't to sell my property now,
Yeah.
and I was just to stay where I am for 5 years, I have lost out on 20% a year as a minimum over the next 5 years.
Wow.
So that is fewer growth, number one, but then less time as well, fewer years of growth.
Yeah.
So you've lost out double.
Well, I don't think most people know how to make 20, 25% a year elsewhere. That's the challenge.
Call me fortunate for working at Investment Mastery then.
You don't have to work at Investment Mastery to make 20, 25%. You can actually learn. Although we're always looking for good people.
Absolutely.
Okay, cool. So, yeah, what would you do? So when you get your rent, you get your income, right? So renting, you maybe you're paying slightly less than a mortgage. Maybe it depends, like you say, whether it is just paying off or whether it is just what is it? What's that term? The what you're gonna
Like the capital repayment, actually bringing down the mortgage.
Yeah.
But you got to think, property isn't just, okay, I get paid this, these are my overheads, this is my profit. You have all of the other liabilities that come with it. I went to Italy last year, and the week we got back, my fridge and my dishwasher both broke in the exact same week.
Huh?
If you're a landlord or if you own your own property, that's on you.
Yeah.
You need to fix that.
Yeah.
Renting, for me, I don't need to worry about those things.
One thing I've never rented, but well, I mean, when I was a student, I did. Yeah, of course I did. But now I haven't recently. So, can you like? I wouldn't want to be in somebody else's furniture, and like they'll have green with brown, and that's horrible. Yeah, I want to create my own.
Not a bit of you, green and brown.
Huh?
Not green and brown, not a bit of you.
I don't think that. No, not really, not particularly.
I think some are furnished, some you can furnish. I think that just depends on the property.
Yeah. So unfurnished, I'd probably want to. Is that then cheaper?
Oh, good question. I don't even know.
Ooh.
Great question.
I definitely want unfurnished. Okay. Now the stock market. Right. I mean, crypto is like insane. I mean, you're talking about Bitcoin averaging since its inception around 100% a year on average.
Yeah.
That's without our strategies, so we can even improve on that. But the stock market in the last 15 years. 10%, but on average, let's say 7%.
Yeah.
Do you know? I keep coming up with the same thing, which is you need to do both.
I.e., own your own property, or
I think you need to have investment properties, and because to me, it's all about diversification. And actually, this is an interesting one because Warren Buffett always talks about do not diversify, and what he means by that is don't over diversify, right? And there's two approaches to this. One of them is you kind of have several things, don't put all your eggs into one basket. We've all heard that, right? But then there's another train of thought, which is put your eggs into one basket, but watch them like a hawk.
Yeah.
Like really specialize in something. So you could say, well, I really know after how many years have you been doing it? Trading and investing?
Started 6 months after I started here, so just under 3 years, 10
What are your results?
Again, VCA about 20-25% a year. I only started that with a couple of thousand, and then I've just topped that as I've gone.
Yeah.
Crypto started with a bit more.
And you're in what figures at the moment? What would you say?
Stocks is in and around 27, I think, last time I checked. And then crypto started with a bit more, started with about 5, and again just topped it up.
And where are you at there roughly?
That's in and around the 40, just under 50, I think, mark now.
Wow, that's really some going. And that might not sound a lot to some people, but that's just the first 3.5 years. What about the next 3.5 years? If you can go from this to this, what, and that's, I think it's difficult to visualize how it continues going up over time. And I think return on investment is only one part. I think everybody really needs to understand this. The missing ingredient that most people forget is time.
Yeah.
Over time, it's not linear, it's exponential. So on that rate of return, that 25 could be well over like 200 grand. And then the next one is, we're talking about the millions. But it's just like, come on. Got to see it to believe it.
This is why I'm in the predicament I'm in, because I can see it now.
Yes.
See the growth.
Yeah.
So do I keep X amount of money tied up in a property, or do I use the skill that I've learned from investment mastery to grow it at a quicker rate?
First world challenges, ladies and gentlemen. First world challenges. I mean, this is a problem.
It's a good problem to have.
It is a great problem to have. Amazing. Yeah. And compounding turns really small amounts, because most people don't have small amounts. Because again, if you had to buy a house, you have to put down a deposit. Although you're saying now they're having 0%. Honestly. So maybe you don't. Maybe you don't. You don't need to put a lot down. And maybe for somebody who knows what they're doing in properties, when they do 0% mortgages, maybe that's the time when you got to buy a load of them. So timing the market in properties is also a good idea.
So saying that, maybe now is the time to buy properties. Again, we don't know.
Okay. I'll leave it at that.
There's always going to be contradictive views on it and other ways of looking at it.
Yeah. Timing. Yeah. Okay. But do you really time the place you live in? You can't. I think for an investment, yes.
Yeah.
But not only for what you live in. You got to live somewhere, right? And the nice thing about if you're renting is that there's flexibility. If there's an opportunity, or you just want to move somewhere else, let's say you meet somebody and they live up there, you can just move. When you got your property, what are you going to do? You're going to now sell your property, which is what you're doing. You're going to have to. You don't have to pay tax on it because it's where you live. It's your residency. Interesting. So what feels riskier to you? I've got a little list up on here, right? Renting forever and never owning. Is that riskier than getting stuck with a huge 25 to 30-year mortgage? And we all know that that's from the French word mort, which is death. So it's, until you die, because most people, back in the day, they didn't live much past your age, really. 35, 40 was pretty much it.
Yeah.
I'd be dead by now. I'd be totally gone. I just did my biological age, everybody.
How old?
I did it as with a company called Glycan Age. It took them weeks to get back. They did this extensive blood test work. And I'm 39. I'm 39, everybody. That's my biological age.
Not bad. Is that what you're going to start using it when people ask you?
What's that?
I'm 39.
Yeah. I'm going to put it on the dating sites now. So what I'm going to do, I'm 39. How old are you? 39?
Yeah.
Prove it. Well, I'm not going to give you my passport. So renting forever, never owning, getting stuck with a huge 30-year mortgage, what feels risky to you? Or not investing at all? Or playing it safe, but missing opportunities? What's that? I guess that's saving.
Yeah, I think C and D are much the same. It would be not investing.
Yeah.
It's C or D. They're both just as risky for me.
Yeah, but okay, so how about, what would you rather do? Renting forever, never owning, or getting stuck with a huge 30-year mortgage? Which one?
It's B. That's where I am right now. But if you asked me 5
'Cause
years, 5 years ago, before I worked at Investment Mastery, it would have been A.
Right. So it's all about knowledge.
It's perspective and what you know.
And you've done it over 3.5 years. So you have built up in your mind, well, you built up a track record, but you've also built in your mind, you know what, I know that I can do this. Yeah. Have you ever been in a bear market?
When I first started, was literally the 2021. It was as the crypto bear market started.
Okay, yeah, you have been.
So all I've had to do
is stocks bear market, though.
No, all I've had to do is invest. Trust the process.
Yeah, no, I get that, but the challenge here is, and I'm always trying to see both sides, right? Is that the younger generation has never seen a protracted. They've seen 1 to 2 years, but they've never seen a protracted bear market, which might be 3 to 4 years.
Okay.
And that, if you're relying, and you've got a job, so you're not, but if you're relying on that, and thinking shit now because then it goes down for 4 years and then maybe goes sideways and then so you could be just going back to this is without a strategy. With our strategy is different, but you could be just getting back to where you were within 8 to 10 years.
If I stop following the strategy.
Yeah,
absolutely. But if we're in a consistent
bear
market,
people, they don't have a strategy.
that's just a ton of opportunity.
A ton of opportunity. If you're, because I always say, look, you can always make money, but I don't know when.
Yeah,
I don't know how long it's going to take. Could be a day, could be a month, but it could also be years. And that's it. So let's have. What kind of strategies would you be using to build wealth faster than property? I don't know what Samuel's going to think about that. Faster than property.
Investing stocks, simply VCA, 20 to 25% a year. I wouldn't look much further.
But I don't think people know what VCA is. So value cost averaging is basically a strategy where we get into really solid companies like blue chips. You've heard, they're international. They have hundreds of products, right? There is no way that in the next 2 years, that's the maximum we're going to be in this thing, right? 2 years with our strategy. The 2 years is going to go to zero, right? So they're solid, right? We wait for a fall. We never buy at the top, and then we start getting in. That's the value cost average. It works so well. And also because you only have to look at it a few times a week.
This is it.
Because people are busy.
Maybe not even that.
Yeah,
and what you say with the consistent bear market is a bear market isn't just this. A bear market is this, and then a spike, and then this, and then a spike, and then
True.
this, and then a spike.
Dennis always talks about, you can actually make money as it goes down. You shouldn't really go against the trend, right? But yes, you're right. You can actually get out sometimes much earlier as well. That is true. It doesn't just go down.
Yeah, absolutely. So there's so much opportunity. So a VCA
He's never been in a bear market.
VCA in stocks, and I'd say the same for crypto, CCA. But the brilliant thing about crypto is it's repeated itself every 4 years.
Absolutely.
So it's so quick.
Yeah, but some people would argue against that, Paul. They'd say, yeah, but hold on, it's only been going for 15 years. Like it's nothing. Gold's been hundreds of years, if not thousands of years. Is that right? Thousands of years? 2000? Well, hundreds, many hundreds of years.
A lot more than crypto.
A few more years, and then there's stocks, which have been going since the 18th century.
Yeah.
So you really have some points to look at. What about diversification? You diversify stocks and cryptos. Do you diversify into anything else?
Not really.
Gold?
No.
Gold has rocketed up.
I do some commodities.
Do you?
That's more trading than investing.
Oh, you're trading, yeah?
Yeah.
Okay, what do you do? Oil and copper and things?
Oil, most of the indices, US 30, 100, 500, UK 100, gold, silver.
He's an expert. Look at it.
Oh, I say expert.
Compared to most. Okay, so your peer group, your 30-year-olds, are they getting those kind of returns, 25%?
Friends outside of...
Yeah.
No.
Are they interested in learning? Or are they like,
Fortunately, for a lot of them, it's not even in their awareness. Yeah, I kind of get whatever.
Oh, really?
Are you a millionaire yet?
Oh, yeah. Oh, my
Classic.
lordy lord.
Classic.
And then one day when you are a millionaire, they'll go, yeah, you were lucky.
Or it'll be, why are you doing that? It'll be, how did you do that?
Well, that's good, isn't it? How?
Absolutely. Just going to take to that point to get there.
Yeah. What about the first 100,000? Surely, you're very close to that. Surely, at that stage, you say, guys, I've come from nothing. Now I'm at my first kind of milestone, which I set myself.
Yeah.
Okay, the second one will be 500,000, and then the third one will be 1 million, and then there'll be 5 million, 10 million, whatever, right?
I think for people in my age, it's not really in their immediate awareness. Whereas my mum and my sister, when I've been on at them for ages.
Is this an older sister?
Yeah. She's not too much older than me, 3 years or so. So she's 33. I was on. Get into crypto. Have a look. Just have a look. And then last year they both messaged me and said, "Can we get into some crypto?"
Okay.
So now I look after her.
So it takes several times.
Yeah, for sure.
And most people, they hear it once or twice, and then they just don't bother.
Yeah.
They do complain a lot though about their financial challenges and
the economy and
it's the government,
everything.
Yeah, it's definitely the government. Actually, I actually think it is the government. Right, okay. I pay for my house. Right, here's an everyday person. I don't know if I can show this, but everyday person on the left, investor on the right. This is the mindset, right? So you got, I pay for my house. It's obviously an asset, right? I mean, but Paul, that's how most people, other people, an investor would say, well, the house that I live in is a liability, right? Unless it's income producing and there's cash flow.
What? No.
Yeah, but you can have a house. Okay, Paul, here. You have a house, okay, and you have a spare bedroom.
Yeah.
Get a lodger. But your wife would love that.
I'll have to get that past the fiance.
Sorry, fiance, sorry. Secondly, a mortgage gives me security if my situation changes. A mortgage gives me security if my situation, is that right? But as an investor, and I'm big on this, liquid. What liquid?
Yep.
Like I can sell everything I have tomorrow. So liquidity and cash flow is security.
Absolutely.
I love liquidity, especially with cryptos, because you can't even walk through another country's airport with £10,000. You have to declare it.
Really?
Cash.
Wow.
Whereas with cryptos, I can go through with my ledger. You can have 14 million on there and you just walk through. They'll never know. So very, very, and I can send it somewhere else within minutes.
Yeah.
Everyday person might say, I can use all my extra money to pay off my home early. I mean, that's what I started doing, paying off.
Could do that. You could also use that money to invest and grow at a quicker rate than what it would by coming off the mortgage. But
if you have enough money coming in, do both if you can.
For sure.
The investor would say invest first. Yeah, so invest your money elsewhere to grow it, and with that buy property, which I think you're looking to do.
For sure. No, absolutely. Maybe not to rent straight away. I think I need to get educated in that space.
Get educated.
Yeah, no, for sure. I'd speak to some of the guys that we know. When the time's right for me, once I can, because to get into property, it's not like you can step into stocks with £1,000 and start investing. You need a lot more capital to do it well, in my opinion. But again, that might be naivety.
What's that with what?
Property.
And with stocks, what do you reckon? What's the minimum?
I mean,
what did you start with?
I started with a couple of thousand in stocks. Started with like 2,000-3,000.
Yeah.
Yeah.
Wow, you've done really well.
Yeah. I mean, it's taken a good amount of top ups over the years. I know I've got.
But that's what we teach.
Yeah.
Keep adding. Most people don't think about even adding. Like okay, here's money I could say. So really stupid things, right? It sounds stupid, right? But this coffee right here. If I went to Starbucks right now, look, this coffee here, that could be £4.60. That doesn't sound that £4. I'm worth £4.60. But if you do it yourself, does it taste as good? Well, actually, you could argue it tastes better because you can do it in exactly the way that you want, right? But let's say it's the same.
Sure. Yeah.
You also don't have to go there. Although that's good exercise. But anyway, so if you save that on a daily basis, and maybe you'll make your own sandwiches and whatever, you could save so much money. People say, I don't have extra £50 or £100 to top it up. Yes, you do. Yes, you do. I mean, come on, you do. I'm going to drink some.
And that's just coffee. There's a lot more bad habits out there than just coffee.
Like what? What bad habits do you have, Paul?
No,
because I see your desk is a mess. You've got so much food on there.
I've got three packs of rice.
I've got a 3-pack. I've got a 3-pack. Yeah, it was 4 yesterday.
Because I ate one yesterday. I buy them on the Monday, and then
you leave them on your desk.
Yeah.
Anyway, so you have that, and then you have nuts on there, and then you have some. So I guess you can't make your own rice. I guess that is probably the cheapest.
I've never tried. The Uncle Ben's pack's what, £1? But actually, like bad habits.
See, branded goods, Uncle Ben. Some people could get cheaper.
Really bad spending habits.
Tesco's own.
Shopping too much.
So many bad habits. I'm telling people, look, there are some habits that you have. You need to be aware of them. That's the first step to change, right? The second step to change is to surround yourself with people who will keep you on track and motivate you and inspire you, but also give you a clip around the ear if you don't. Change those little habits, those little tiny habits. And most people, I'm not saying everybody, because not everybody earns that much, but most people, you could build up. So you started with a couple of thousand, and now you said like 25, 35, 4, 5, 6. So you're just shy of 100,000, right?
Yeah,
but in 3.5 years, I mean, that's, and if that continued, I think, why don't people do that? Why?
I think it's just knowledge or lack of, as you say. Yeah, you need to be aware to your bad habits, but you also need to have awareness to what else you can do.
I think but I think it's also their environment, because they're like, well, none of my people do it, so I'm now going to do something, and I might look stupid, or they'll attack me, or they'll laugh at me, they'll ridicule me. Don't you think, like your environment?
The amount of people that we speak to in the sales team that are somewhat scared of starting this because of the reaction of other people,
Really?
is bonkers.
So we should do a video on that then.
Yeah, for sure.
Ooh,
Absolutely.
Can we write that down? Let's do a video on that, because that will help people the most. Honestly, it's the mindset and psychology, which is the 80%. The skills. Everybody watching this today can learn the skills.
Absolutely.
If he can do it.
And I'm not that smart either. I'm
Nor am I.
lower end of the.
Nor am I. You don't have to be smart, right? So that's the good thing. Now, before you lock yourself into a 25 or 30-year mortgage, which he's looking to get out of, right? So run the numbers, but also start with our money management calculator.
Yeah.
This is a great way. And by the way, it's free, available today for free. So link in the chat below. This is what changed my life. You've got 100% of your money coming in. Where does that money go? In other words, you manage your money. Most people don't manage their money. And suddenly you have the funds to invest. You have the funds to give to charity. You have the funds to have fun. You have it. But you should be spending that money. I think it's brilliant. So start with the money management calculator. Final thoughts? Any final thoughts?
Your home can be emotional security, but it's rarely financial security.
Amazing.
I would agree, because if you stop paying for your home, it's not that you have security, you're going to stay in it.
Yeah.
That's going to be taken away from
So
you.
how are you going to convince your fiancé then? You're about to sell your home where your children live.
For the long-term growth, for where we're going to be in 10 years.
No, I understand that you logically can explain that to me.
Yeah,
How are you gonna do that with her?
Massive bunch of flowers, I think.
Really?
Yeah.
Do you think she might be watching this?
Yeah, maybe. Maybe.
Do you have a message for her?
Yeah, we're going to be safe. Don't worry.
I agree. He's so solid. He's so solid. He'll make sure he'll do whatever it takes. And that's what you got to do, right? You got to look after your family and do whatever it takes. Well, listen, guys, I hope you enjoyed that. I hope it gave you some thoughts, something to think about, and then action, of course. And that's what we like to do at the Lunchtime Investor, where basically we always say this, never quit. And I tell you why, because if he can do it, you can do it too.
Absolutely.
Right? And we'll see you on the next episode, which I'm really looking forward to. I'll see you the same time next week. Ciao for now.